It is day 2 of the Beijing Auto Show, taking place in the capital of the world's largest auto market. Despite such strong growth in sales, China's homegrown auto brands continue to struggle with a reputation for inferior quality. In today's report from the Auto Show, Xia Cheng and I try to find out what it's going to take for domestic automakers to develop a car with global appeal.
When car sales take off, China is yet to be on the inside track of car design and innovation. But there are people who are trying to change that. I speak with Wu Lingaowa, a female Chinese car designer.
For Chinese industry, they have priorities in the early stage. That makes design suffer a little bit at the very beginning. But now, as we are creating brands, right? We are managing the brand. This is a time to start to think about the design, the strategy, because design strategy is the only thing that gives brand value. If we look at the current products, all these famous products, famous brands, when they sell their car in China, most of them has to make it longer, extra longer. It's like the Audi, BMW, even Mercedes is making an extra longer vehicle. And I think this is something that you can consider a sick factor in China. So this has also influenced the brand globally.
Chinese brands are taking a ride on joint ventures with their foreign partners. But just where that 50-50 structure is going, it's something that is being debated in the industry.
The current discussion on loosening certain rules on the joint venture requirements, I would personally welcome, because that will basically create more competition, which the Chinese brands have to face. Higher share of international companies in their joint ventures, I think they would highly welcome that. First of all, it gives them more decision power. They can react faster to product changes. They can steer the sales channels faster and can launch the products faster in the market. And secondly, it gives them a big incentive, as they will have a higher profit share from revenues in the Chinese market.
One independent Chinese maker is going global from the inside out.
On our global strategy is not just trying to get values. We are trying to create global supply chain, a global tech team, including R&D platform that meets global standards.
Meanwhile, Chinese indigenous automakers are losing market share. In today's Auto Show profile, I speak to Zhou Biren, the general manager of Chery International, about why the Chinese automaker is pinning its hopes on going global. Some of the Chinese automakers I speak to are trying to pull back from their overseas expansion because they think it's not worth it. It's much easier to concentrate on China and make more money.
I don't think this is the case. You know, on Chinese market, we are the biggest with 22 million units a year sales. And all the car manufacturers in the world come to China and bring all their products to Chinese market. So it means that the competition of the Chinese market is the same as any other countries. So if you can compete with all the car manufacturers, why you don't expand your market to the other countries?
Okay, so tell about your overseas production bases. There's one in Brazil that's coming online this year.
Currently, we have several production bases. The first is Brazil, and Russia, and Iran, Egypt, Ukraine. Yeah.
So in terms of China sales, you're actually losing market share, but you're trying to basically revamp your whole lineup, every part of your business. How's that going, and what are we expecting this year? Can we see a turnaround?
3 years ago, we made the decision to make a change in our strategy of the development. So after 3 years, we focus on several new models, which were launched last year, such as the Arizo 7, E3, and Tiggo 5. So after half a year, it shows that all those cars has good quality, the good performance, and has won the good response from the customers. So from the first quarter of this year, actually our volume has increased, especially that all these products have come to the mainstream segment of the Chinese market, not like before, just a low price segment.
What's your growth projection for this year in terms of sales?
Term sales compared with last year, our target is in total, both the domestic market and the Chinese market, 20% increase. This is our target, more than 20.
And you have two very impressive joint ventures or tie-ups. One is with Land Rover, Jaguar Land Rover. Another one is the Chorus brand. Tell us about how that's going and how that's going to elevate Chery in the future.
You know, for the Chorus, they already launched their car on the Chinese market. And the Land Rover, we have started production at the end of this year. And we are very confident with these two joint ventures. Land Rover, everybody know it. And their car are very good sales on the Chinese market.
And what's that going to do to Chery?
First, they could promote the Chery's reputation on both Chinese market and abroad. But of course, financially, if they earn money, they can give the support for the Chery headquarters to develop more new models for the Chinese brand.
Everybody at the Beijing Auto Show is talking about technology. Ladies in electrics, cars that drive themselves, you name it.
With free car plates and government subsidies, are buyers getting on the electric bandwagon?
And why does an infotainment company want to become a software provider?
And what tech edge do Mercedes-Benz and BYD have up their sleeves? Tune in to our Auto Show special on Wednesday.